Highlands Light FM. That's Phil Collins. I'm Morning Dave. We're at 8:41 here. It's 19 before 9. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. And all that means it's time to check in and see what Wall Street's doing with us today with our money. And always, when we can, with the help of Phillip Statler from Statler Financial Services in downtown Sebring. Phillip, we had our usual seismograph about 2 o'clock yesterday afternoon in the charts, didn't we?
Well, we did. It did for temporarily anyway, Dave, because we still ended up with kind of a mixed bag at the end of the day.
Absolutely. It happens every time the Federal Reserve announces an interest rate decision, even if it's what everybody expected. This time things went up, then they went down when Powell started talking, went down again, and then after everybody digested what Powell said after the decision, all three indexes pretty much went back to where they were before the Fed announcement. The Dow ended up 260 points, so it's now over 46,000 again. S&P was off by 6.5, which is about as close to flat as you can get. And NASDAQ was off by about 0.33%, down about 72. And all of those numbers were pretty much where they were before the Fed announcement. So basically, we did what we said we were going to do. And Powell kind of said what he needed to say. There aren't any risk-free paths available to what they're doing right now, which doesn't really surprise anybody either. I can't say boring because it was a 500-point swing in the Dow from top to bottom during that little period. But at the end of it all, everybody digested and said, oh, okay, that's about it.
Yeah, and the Russell 2000 actually ended up in the green yesterday, too, up almost 0.2%, $4. So, but yeah, you know, we look at what Powell had to say. And it was as expected, a 0.25 point drop, and also as I read through some of the language in there, they did, and this was kind of alluded to before the meeting, that we would see them to start to pause their selling of their financial instruments, treasuries and mortgage-backed securities back into the marketplace. So
that's good, and that I was saying yesterday that has almost the economic impact of an extra rate cut without communicating that we're in deep doo-doo with a big 0.5% cut. So that sounds like a good middle ground to hit, doesn't it?
It does. So basically, they're going to institute that, and so they're basically going to put a hold on liquidating their balance sheet at this point, which will not take as much cash out of the system.
And that's good news overall. And the market appears to, when we get to the futures this morning, after digesting it all together last night, overnight, the futures appear generally happy overall. Just to quantify it for everybody, the Federal Reserve cut the federal funds rate. That's a reference rate none of us pay, but it encourages interest rate changes elsewhere. At the conclusion of the meeting, they cut it from 4 to 4. Now the target rate is 4 to 4.25%, which is a fair amount down from where it was a year and a half ago, but not as low as President Trump and his allies want. And you mentioned that you haven't noticed an immediate decrease in mortgage rates, but that doesn't necessarily mean they aren't necessarily going to change.
Well, I didn't talk about mortgage rate. I'm talking about 30-year Treasury, which
that's right, 30-year bonds,
which influences the mortgage rate. The 30-year Treasury is really where it was yesterday morning at 4.69%. Down from where it was earlier, but yeah.
Okay. The 10-year hasn't changed all that much either. It is, let me see, actually up by about 0.3% now, or 0.03%. It's not much of a change, in other words. That a lot of that ends up getting baked in as the auctions on the bonds happen and whatnot. So we haven't really seen the impact quite yet. And I misspoke on mortgages, but we'll also see that coming down the pipeline, and that will probably end up resulting in a another dip in mortgage rates.
I
We've
would
got a
think
whole
so,
bunch
Dave.
of,
Hey, the other thing, I just want to mention this real
yeah,
quick too about interest rates is your credit card rate is based on that rate. So you should see a quarter point drop eventually in your credit card rate. If you have HELOCs, home equity loans, those are directly related to this. And so you should see a quarter point drop in those as well with this interest rate cut.
and folks who bought variable rate mortgages will see some results too when they renew at their term as well. Other things going on. I found this kind of interesting. Nvidia is investing a few $billions in Intel. So between President Trump trying to get the government involved, Nvidia as well, suddenly Intel doesn't look like it's in as much trouble as we thought it was going to be, did it?
No, and they're going together to build a co-developed data center, is what they say, and PC products. So yeah, Intel's loving that, man. They're up almost 30% this morning.
It's funny. You kind of stereotype Nvidia and Intel as being Cobra and Mongoose, and all of a sudden they're partners. That's certainly helping the tech stocks a little bit overall. Other economic information that came out, we got the first-time jobless claims this morning. Last week it was 263,000. We've got 231,000 first-time jobless claims. That's really kind of nice to see something actually with better news than we expected on the employment front, because all those data revisions we've gotten over last month, it's really enough to put a pall on your attitude toward the employment market, isn't it?
It is, and that's the expectation was about 240,000 first-time claims. And then I also saw that the continuing claims went down by about 7,000. I think that puts it at 1.91 million continuing claims.
It'd be interesting to see whether or not those are people that have fallen out of the system because their benefits have run out, or whether they actually found a job. That's the dig deeper element that we haven't been able to get from the first blushes out of the government this morning. Other tidbits floating around. Another stock influencer heard from FBI Director Kash Patel. I don't know when he did this, but he called Krispy Kreme stock a buy. So all of a sudden, you want to buy donut stocks. That sounds like a pretty good deal right now. He gets chewed out in front of the Senate, but by God, he can still influence the stock market. Other stuff going on.
We got Nike. Nike got upgraded by RBC Capital Markets. That's helped their stock this morning. Got it up about 1.5%.
Good to hear. We got any reports that are out this morning? We're at the tail end of earnings season, but I know there's some household names due to report today, either before or after the market.
We do have a couple that reported. Let's start with somebody that's been in the news lately. Not on the good side either. Cracker Barrel.
Yeah.
Cracker Barrel reported, and they missed on their earnings. They came in at 74 cents a share. That was 6 cents less than expected. Revenue was more than expected, but still they're getting beat up pretty bad, down almost 6.5% this morning before we get trading. Another big name, Darden Restaurant, the holding company for Olive Garden, Texas Roadhouse, that group of restaurants. They came in and missed as well. They missed by 3 cents a share, came in at $1.97. Revenue came in as expected, though, a little over $3 billion. So that's we got them heading down about almost 8.3% this morning. Olive Garden and Texas Roadhouse kind of kept things going as far as same store restaurant sales. However, their other brands kind of underperformed.
Maybe they need to buy out Krispy Kreme and get Kash Patel on their side.
The last one I have for you is a local company, Nucor. Nucor. Third quarter results. Maybe they're not reporting yet. They're just adjusting. They're not reporting. They're adjusting their expectations for earnings in the third quarter, and they're originally the expectation was for them to come in about $2.50 to $2.60. Instead, now they're saying, well, we're going to be somewhere between $2.05 and $2.15 a share in earnings. And the market's not liking that. They're trading down about 4% this morning.
Oops, I know Nucor's got a track record of never doing layoffs, but it's never good news when they don't plan on doing as well as they'd originally planned. Resetting the table for this morning, the blue chips were up yesterday morning. Everything else is pretty close to flat after the Fed rate decision. 45 minutes before we open this morning, I gather they've digested the data a little more and like it, don't they?
They do. We got green ink. The green ink has fallen a little bit from earlier this morning, but it's still solid green for that matter. The Dow Jones Industrial 30 is up 0.3%. S&P 500 is up 0.6%. And the NASDAQ 100 is up 1%, as well as the Russell 2000 up 1%. So some solid green ink there. On the other side of the coin, we got silver flat right now, gold down 0.5%. Crude oil, Dave, heading the wrong way, trying to get to 65. It's up almost 0.5% to $64.33 a barrel right now.
Well, that crud can stop anytime it wants to. Looking at the overseas markets, I don't like it when the gas price goes up. Overseas markets, the Asian Rim had kind of a rough day. Both mainland Chinese markets were down by more than 1%, and everybody else followed suit. It was generally a negative -1% or more day in the Asian Rim. On the other side of the fence, Europe's relatively happy at a reasonably conservative reaction from our Fed. European indexes are all up, German indexes by more than 1%. Average European index is up almost 1% across the day, halfway through their trading day in Europe. Getting my retirement together so I actually know I'll be able to retire is something that's enough to keep a person awake at night. Help me sleep at night. How do I find you to get on track?
Dave, and give us a call at 863-382-0037 to schedule a 30-minute call to make sure you're on the right track to the retirement you always dreamed of. And then catch the Statler Financial Radio Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
All righty, and we're here almost every morning as well, so I'll catch you soon, my friend, and I wish you a very pleasant weekend.
All right, buddy. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Who likes uncertainty? Wall Street certainly doesn't. With fears.
You told me you weren't going to be here on Friday, but I didn't get a chance